The popularity of plant-based food products has grown over the last few years, thanks to the success of companies like Impossible Burger and Beyond Meat. And a new report from Bloomberg Intelligence projects that the plant-based food product industry could hit 162 billion by the end of the decade. Joining me to break down all the latest findings is Jennifer Bartashus. She's the senior analyst with Bloomberg Intelligence. So Jennifer, tell us, we see the industry is really poised for a lot of growth over the next few years. What are some of the key catalysts that will be driving this?
Well, there really are a couple of catalysts that we think are just going to propel growth. And for our forecast, we're looking at plant-based foods as including both meat alternatives as well as dairy and other alternatives as well, to get to that $162 billion. But in terms of catalysts, there are a couple of things. One of them is that prices are becoming closer in line with conventional proteins. And the more that we reach what we call price parity, the easier it is for consumers to buy those products on a regular basis. It makes them less of a luxury item, and becomes something that is a repeatable purchase. The increase of these products in terms of distribution, so they're in more stores than they've ever been in before, and where they're placed in the grocery store. So a lot of these products are now directly next to the conventional products. So when consumers are shopping for meat or for milk or for ice cream, they see these alternative plant-based products directly next to them, and it becomes easier for them to buy those products when they're in stores, versus having them tucked away in their own little corner of kind of a specialty item area. And then from a business side, when you look at companies like Beyond Meat or Impossible Foods or Oatly or some of these growing companies, they're going to continue to gain scale, and they're going to become much more efficient in their operations. So the ability to produce these goods is getting better and better, which also helps bring down cost, and it helps make it easier for customers to reach it. And then finally, we really see the restaurants play a very important role, because that is a place where a lot of people can, at a very low risk, try some of these products for the first time. And when they have a positive experience, it's easier for them to then incorporate that into their food at home preparation as well.
Yeah, and as you mentioned, is such a big key in really getting the adoption numbers up in this industry is to achieve that price parity. And as you said before, we've seen startups like Impossible and Beyond enter the market, but we would also see the entry of some of these legacy names like Tyson and Nestle really adding to their product lines. Can you talk a little bit about maybe the interplay there and how the industry is really looking to implement to achieve scale and really drive down those costs?
Well, the entry of these big packaged food companies into the alternative protein space is actually very important for the growth of the industry. And it is part of what gives it that sense that this is not a fad, that this is something that will be around for a while, because these bigger companies are investing in these platforms. But when you talk about Tyson or Kellogg or Conagra, any of these big companies, Kraft Heinz, there's an appeal to them because this is a growth area. When you compare that to the product lines that a lot of these companies produce, they're slower growth in terms of their portfolio. So this is a way to tap into a higher growth segment for them. But because these companies all already have huge distribution networks, it's very easy for them to take these new products and get them into stores. So a great example would be Tyson with its Raised and Rooted line. Because Tyson already sells to virtually every retailer out there, adding a new product into that distribution goes very quickly. And it really enables that part of the scale up that I was talking about of making products across the board much more accessible to consumers.
And as you said, this is a growth market, it's a growth product. And a lot of our investors have been really interested in following names like Beyond Meat over the last year, which performed really well in 2020. But as we look at some of these pure play stocks in 2021, they seem either to be kind of stalling out or moving sideways a little bit. Can you talk a little bit about the disconnect there and where the industry is right now in its maturity?
Yeah, the industry is very young still, and really hasn't hit its maturity curve at all. And when you look at these pure plays, I think part of the temperamental attitude towards them really swings from the fact that these companies at this point are not focused on profit. And so when it comes to earnings cycles and the reporting of earnings, you look at companies like Beyond Meat or Oatly, and the message is we're continuing to invest in R&D. We're continuing to invest in the development of products, not in focusing on delivering profit to investors. And so there are expectations for significant growth, and we see top line growth actually coming through on a full year basis. But when it comes to investor expectations for returns, right now, returns come from price appreciation, and that price has been a little bit volatile for some of these pure plays so far this year.
Right. And, we've talked about, the plant-based meat category. And as you said, this report was kind of modeled on alternative dairy products. But what are other promising areas of growth that you're seeing in the category, is just as far as just the wealth of different options that are out there?
Well, it's interesting because within alternative meat, I think we've got well-established products with regards to hamburger replacement. We think that chicken is going to be it's the year of the chicken. That's sort of the next wave of products that we're looking at in terms of the plant-based alternatives. And part of that is, if you think about the low-hanging fruit, your typical consumer perceives regular chicken, to be a healthier alternative to regular beef anyway. So it already had a slightly better health profile. So the alternative protein companies going after beef replacement made sense because it's got a bigger potential health benefit claim to it. But now that a lot of those products are established and they're continuing to iterate, but we think that chicken is the next wave, and then seafood will be shortly on the heels of that. But on the other product side, when you talk about dairy or you talk about other products, some of the areas that are still very small, but we think are going to grow very quickly, are things like alternative ice cream. So oat milk-based ice cream, soy ice cream, still very small category, but has the potential for a lot of growth. Same for cheese replacements. And another one is eggs. So egg replacement is important, not just for eggs themselves, but if you think about everything that eggs go into. So condiments like mayonnaise or dressings for salads or bakery items. So that's another area that we expect to actually grow very quickly over the next couple of years.
And as this industry moves forward, what do you think is the most important thing for investors to keep in mind as this growth occurs and as the industry really matures?
I think there are a couple of things, depending on the type of investor you are. The one is that if you're interested in the pure plays, it's really a question of longevity, meaning, there's going to be patience required, as we've seen with the stock prices going up and down, and as these companies mature and shift into a bigger focus on bottom line. So for people who are interested in the pure plays, maybe a little bit of patience is going to be required. For people who have a more diverse portfolio, looking at these bigger CPG companies that are, building exposure to this, alternative protein products, is a way to tap into the growth and still have some of the security of those large packaged food the stability of those large packaged food companies as well. And none of these companies has a huge portion of their portfolio allocated to alternative protein products at this point, but they're all continuing to grow. And so that is a way that you could participate in the growth cycle if you're a little bit more conservative.
Well, Jen, thank you so much for your insights today. It was really great to speak with you.
Thank you so much, Alexis.
And you can head on over to investors.com for the latest news and market coverage. For Investors Business Daily, I'm Alexis Garcia.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.